It would really, yeah, that was one of the best like we've done. It really made me think of stuff, and now I'm gonna like incorporate it into our next episode of Orange Pill Podcast.
All right, Stacy, Max, great having you. After this historic day yesterday, we saw a massive dump at Bitcoin. So what the fuck happened yesterday? It was the sixth biggest drop in Bitcoin history. So how did it feel? And did you panic sell?
Right. So since we've been involved with Bitcoin, there's been 15 of these sell-offs. We've been documenting them all, and we've been buying them all. It was a garden variety sell-off, nothing special.
Yeah.
I was just listening to Mark Yusko talking about Amazon stock and saying basically Bitcoin has the same volatility as Amazon stock. And when was the right time to sell Amazon? Never. Right? So if you have an asset compounding at 200% a year for 11 years, you're going to have volatility. Volatility is a trade-off because I'm happy to accept the volatility if I get unconfiscatable Bitcoin, I get separation of state and money, I get an asset better than gold that stores value better than gold, a better store of value than gold. And all the benefits that come with Bitcoin, I'm willing to take them all in exchange for a little volatility. So it's healthy and it's predictable and it's ultimately doesn't really mean much.
Okay.
For me, it felt like, Bitcoin was on sale and I was super happy with it. Unfortunately, I had just had my second cup of coffee when the whole thing started to plummet like that. And so the adrenaline rush was quite huge. I would have, had this happen before my second cup, I would have been a little bit more relaxed and been able to stack more. But it was kind of difficult. That's one of the things about these crashes is whoever was dumping at $30,000, it was hard to buy it, those cheap sats, because a lot of exchanges, the liquidity on the buy side dries up.
Yeah. Yeah, I heard your podcast that you tried to buy, but it wasn't possible because Kraken was down, Coinbase was down, and all the exchanges were down, or it was hard to get on. So yeah, but I think it was a once in a life opportunity. We saw Bitcoin around 30,000. It bounced definitely back. So what do you think? There were a lot of conspiracy theories about the dump. So any thoughts on this?
Well, the conspiracy theories over the past 11 years have gotten less conspiratorial. Right. So going back 10, 11 years, the conspiracy theories were a lot more exaggerated and a lot more fantastical. And now as Bitcoin's become a major asset and held by institutions around the world, you have more of the average conspiracy theories that apply to markets everywhere. And they come up when talking about Bitcoin as well. Ultimately, it falls under the category of noise versus signal.
Yeah.
So the signal is what we just talked about and why Bitcoin's going a lot higher. And there's going to be a lot of noise surrounding what's happening all the time. And so this is it's important for people not to get distracted by this type of extraneous information that doesn't really apply to the main theme.
Also, bull markets deliver these precious, valuable, huge, crazy crashes. That's what happened. That's the signature of a bull market. So they're always primed for this. And you see who was selling yesterday was a lot of the newer addresses.
Yes.
So it would have been new retail who are scared, and they might only have $1,000 in it, but they're nervous they're going to lose $1,000. Whereas the hedge funds, they had tax season, but they also had very attractive tax losses.
Yeah.
If they could sell and then buy back, which you're allowed to do here because it's, the IRS, the tax services here, they consider it property. So you're allowed to, unlike a stock, you're allowed to dump it and then buy it straight back within a moment. So if they were dumping to grab those beautiful losses, a lot of finance guys on Wall Street, they want tax losses. So that was a good opportunity, and maybe all of that sheer volume might have scared all the new retail people.
Definitely. If you have diamond hands, if you saw the crash in 2017, or if you experienced the bull market in 2017, we had we had 6 major corrections on the way to 20,000. So you're actually used to it. So actually diamond hands, we saw Elon Musk yesterday tweeting a diamond hands. What's your point on him? Is he a scammer?
Well, he didn't do any due diligence. I mean, you compare him to Elon Musk to Michael Saylor. Michael Saylor, when he announced he was buying Bitcoin, he also came out with an enormous amount of information. He had studied it for a long time, and he studied the technology, the protocol, the community. And Elon Musk hasn't really done any due diligence. He's a bit of a dilettante, right? So he's a guy who likes to, I saw an interesting comment about it, about Elon saying, commenting on Bitcoin centralization in a way that kind of exposed the fact that he was ignorant of this.
Yeah, he doesn't get it.
The comment on Twitter was, "No, Elon, it's you that's self-centered."
Yeah.
True.
He's also kind of like the Forrest Gump of the space, is that he just happens to be, at the electric car, period when that happens, and SpaceX, and like he seems to just like wander into these, whereas really he's one of these, he says he's autistic. He's like one of these autistic guys in the troll box at BTCE. And that's what he does. Like, I think he just likes to troll. And I think perhaps he doesn't really understand, what he's actually doing.
Yeah, perhaps he's front running. And do you think the SEC has to look into his case, or what do you think? Is he a
The SEC is already looking into his case. The SEC is always looking at. I think we've had a couple of cases of people like whether it's John McAfee, I think who's now in prison in Spain. They thought they could do the coin of the day. And they claimed that they were doing the people's money, right? And so now he's in jail. I think Elon, if he keeps it up, he's going to find himself in jail as well. And that's what happens to people sometimes.
Yeah, who scam people. Yeah, true. So you've been through a lot of these cycles we've seen. Crazy stories. Do you have any crazy stories from early dumps back in the days?
Yeah, we have thousands of crazy stories from early times. You have to be more specific than that.
You very early adopters, Stacy and Max. I first saw you in 2011 on your show talking about Bitcoin, and I thought, to be honest, I thought that sounds like another Ponzi scheme. Come on, funny internet magic money. This doesn't work. And yeah, I realized the potential later in 2013, which is really early for Germany. And I wrote in my second book about a chapter about Bitcoin. But then I was fascinated. And I think, hey, Bitcoin fixes this, and we need a new monetary system. So what triggered you? How did you discover Bitcoin?
Right. Well, in 1996, I started a company in Los Angeles called the Hollywood Stock Exchange, and I invented actually a virtual currency. And I have a patent on a virtual currency, several patents. And that was a part of the gaming industry. And in my view, Bitcoin came out of the gaming industry, multiplayer gaming industry that was really birthed in the age of the internet. The problem was all the gaming currencies are centralized, and so they could never really break out of the game into real world. What Bitcoin does is it's decentralized digital scarcity. So that's the breakthrough. And so I realized that, okay, this solves the problem that we were trying to solve back in the mid 90s with this brilliant insight into how to assemble these technologies. And so I started buying it.
And also, so when we were first talking about Bitcoin, the market cap was just under $40 million. And then it went up to $13. So it was like $150 million it went up to in that summer of 2011. And then it crashed by, I think it was 90%, 90%?
Yeah, 90%, yes.
90%. And so that went back down to like $20 million market cap. We had a lot of people, if you look under those old YouTubes, like, fuck you, Max Keiser. I put my life savings into this thing at $10 and now it's $1.
Yeah.
So there's always these cycles, but obviously, to go from $150 million market cap to, 20 million wasn't as the same amount of money in the universe of all fiat. So now when it's at $1 trillion and crashes down to like 600 billion, it that's $40 billion that's like moving around. And so it's like, it's a wider, you know, effect, the echo effect around the world. And so more people crying. But like, if you've been through, this is our 15th big correction, as Max pointed out. So, you know, you get used to it after a while.
Like tradition, yeah.